Quick hits. Quick hits. I love this part of the show because I get to talk about three things. Three things that I'm sure many of you are watching or have seen on TV or have seen online through social media and perhaps other places. First one, or first quick hit that a lot of people have been talking about are Trump cabinet nominations. They've attracted a lot of attention, some more than others, but President-elect Trump has put into place, or at least put forward, many names that carry with it certain ways of thinking. And that has definitely has caused the market to move. Google, I'm sure a lot of you have heard about Google or Alphabet, the parent company, and how they may be forced to sell their Chrome browser. The DOJ has said in the United States that they are a monopoly, that they cannot maintain this monopoly, that is Google or Alphabet, and they will be forced to divest of certain parts of their business. And they came out recently and said the Chrome browser is the business that I guess the DOJ wants to, which is, by the way, Department of Defense, Department of Justice, what they want them to do to be more, to open up the industry, to be more industry friendly, to obviously sell off that part of their business so that other businesses can get into the browser business. The third quick hit that I wanted to touch on, and I briefly touched on it earlier, is this idea of the S&P 500 predicted by some to rise 8% by the end of the year. That would be fantastic if that were the case. I'm not holding my breath on that one. To me, if we see a rise of maybe 3 to 5%, I think I'd be plenty happy with that, especially after the huge gains we've seen in the market so far this year. So let's move to our first one, the Trump cabinet nominations. And as I said, they're attracting a lot of attention. The most recent Treasury Secretary, Bissent, he was a hedge fund manager. And President-elect Donald Trump basically tapped him on the shoulder and said, we want you to be the Treasury Secretary. This gentleman is definitely in favor of tariffs, but he's more moderate. He says, we're going to use tariffs. We're going to use tariffs as a bargaining tool. Not necessarily are we going to just slap everybody with a 25% tariff, China with a 10% tariff. We're going to keep that in our basket and use it if necessary. So that was a positive. And because this gentleman was a hedge fund, I guess, I don't know if he's a guru, but well respected in the hedge fund community, the market definitely liked that. He's going to be pro-business, pro-investment. So that was a positive for the stock market the other day. We saw the markets move up on that effect. On the flip side, we saw the appointment of Robert Kennedy, and he was appointed as HHS secretary. So he's going to be in charge of health and food. And we know, based on what he has said in the past, he's not in favor of vaccinations. He is skeptical of vaccines, also very negative on some preservatives that go into food. So we saw on the day that he was announced, we saw pharmaceutical industry sell off significantly. And our chart that we have to show with respect to this, you could clearly see that the pharmaceutical, this is a iShares US Pharmaceutical ETF. Look how much pharmaceutical industry fell when his appointment or announcement that the Trump administration was appointing him secretary of the HHS. Since then, the good news is it's rebounded somewhat. And, you know, Robert Kennedy has said a few times recently that he's not going to bash or be negative on the vaccines that are already being circulated in use already. But he's definitely going to be very stringent on any new vaccines that want to come to market. So anything that's been done in the past, I think the names like Pfizer and Merck and names like that should be okay with respect to what vaccines they already have going right now. But new stuff, that is where he will be very strict. And, you know, I think that most of us would want him to be strict about any new vaccines coming down the pipeline. So the appointments that Trump has made definitely have affected the markets. Second quick hit is regarding Google or Alphabet and the fact that the DOJ, Department of Justice, wants Google to sell off, divest their Chrome business. And why are they doing that? And if many of you are thinking, well, this is really, really tough. Well, our first and only chart, I guess, not our first, but our only chart here shows why. You can see here that Chrome makes up 66.68% of the market share worldwide, the browser market share. Safari, which as many of you know is from Apple, makes up less than 20%. So it definitely has a dominant market share. And, we've heard companies like OpenAI trying to get into more of the search business and all that. So there's definitely competition for Google, but the browser business, the Chrome browser, is definitely unmatched. And I know Google has said that if the DOJ forces them to sell off this business, that it will be bad. It will be bad for investors. It would be bad for the product lineup that Google presents to everyone, all of us. It will definitely hurt Google, which in turn will probably hurt many individuals that use search, Google search, the Chrome browser, which many of us like and use. I use it all the time as well. So we'll see what happens. The talk is that whatever happens probably won't play out for maybe as much as 1 to 2 years. Google is going to appeal anything that gets handed down to them, and that appeal will probably take quite a bit of time. The third hit, or the third quick hit that I wanted to get to today is this idea of the S&P rising 8% by the end of the year. We have a chart of the S&P 500. It is our last chart of the show, and it clearly shows S&P going higher from the bottom left to the top right. S&P's up quite a bit over the last year in that 25% range. It has been a phenomenal year, building on top of the 20 to 25% growth in 2023. It begs the question, what do we expect in 24? Well, I would be happy with a traditional rate of return, 8, 10, maybe as much as 12% on the S&P 500. If we were to get that kind of rate of return after the last 2 years, I would be just fine with that. And with respect to the end of this year, if we can get a bit of a Santa Claus rally, 3 to 5%, I'd be happy with that. I know a lot of people are aggressive with their predictions, calling for an 8% return. As I said, I'm not sure I'm in that camp, but if we do see that, that would be just gravy on top of a fantastic year that we've had so far in 2024.